Namaste, dear students. So today we are starting the classes on corporate accounting to accounting for general insurance companies first unit. So since you have understood the general insurance term and what are the types of general insurance and the other details like marine and fire insurance and all. So now after that theoretical class, now we are stepping into towards a problem. So before going to the problem, before going to the solution part, there are few things which you have to understand. So what is that few things you must understand? So that is, while preparing a general insurance company account, so you should know the proforma or format of the problem. Without format, we cannot solve the problem. Clear? Clear. So that is why let us learn the format or proforma of accounting for general insurance. Okay. So we are starting accounting for general insurance companies. So first I am starting with the proformas. Proforma, or you can call that as a format or anything, whatever. Okay. So which is very important. Without this we cannot do anything. Okay. So for this, let us draw the table, that is revenue account. Revenue account is the heading. So revenue account. So this is the detailed one which we do calculation. Clear? Which we do the calculation. So let us draw a table for a format. Let us all draw a table for a format. So the format goes like this. The format goes like this. So the format is so I'm ready with the table. So the title of the table is, as you all know, that particulars, then rupees. Particulars and rupees. Okay. So now it is done. So let us go on the first point. So that is schedule number 1. For that, first we have to take incomes. So first we have to take incomes. So under that, write schedule number 1. Schedule number 1. What this schedule number 1 speaks about? This always speaks about premium earned. Premium earned. So you should remember that schedule number 1 of general insurance company is always gives the account details of premium earned. So you should remember this. Clear? You should remember this. Revenue account, schedule number 1, premium earned. Okay. So in this you will have as a first item is premium from direct business returns. So what? Premium from direct direct business direct business return. Direct business return. Okay. So since we don't have anything, so we are writing it as a triple X. Okay. Second one, add. So you should remember this also. What to add, what to deduct. Clear? So we are adding over here, add premium on reinsurance accepted. Remember this, premium on reinsurance, premium on reinsurance, premium on reinsurance accepted, premium on reinsurance is accepted, triple H. Premium on reinsurance accepted is always add. Okay, less. So next is deduct. What to deduct? That is premium on reinsurance. Premium on reinsurance ceded. See, remember this word. Premium on reinsurance ceded is always deduct. So deduct this. So whenever you want to deduct some amount, so write those amount in bracket so that it is understood it is going to be a minus. It is going to be a minus figure. Okay. So now add premium from direct business return to premium on reinsurance accepted, then deduct premium on reinsurance ceded. So that is going to be deducted amount. So you have to deduct and find the balance and write the balance over here. Write the balance over here. So next, add outstanding premium. Outstanding premium. See, usually outstanding premium you will have two types. One is current year outstanding. That means the present year. Clear? And previous year outstanding. So current year outstanding is always addition. Previous year outstanding is always deduction. Okay. So outstanding premium for current year. Outstanding premium for current year is always add. So add that. Okay. So then less outstanding premium, outstanding premium previous year. So previous year always it should be deductible, I said. So deduct it. Whenever you wanted to minus something, so you always should write it in a bracket so that it is clearly understood that is minus. So after adding the outstanding premium and after deducting outstanding premium of the previous year, so write the balance. Write the balance. Done? You could able to understand, right? You should understand, otherwise you cannot solve the problem, dear students. So try to make out, try to register in your mind what to add, what to deduct. Okay, so next after this, add reserves for unexpired risk. What? Reserves. Reserves for unexpired, reserve for unexpired risk. Outstanding, outstanding, reserve for unexpired risk, outstanding. So that we are going to add. So here you should understand one thing. It should including additional reserve. So it should include what? Including additional reserves. Additional reserves. Okay, including additional reserves. So after that, less reserves for unexpired risk. Reserves for unexpired risk. Reserves for unexpired risk. Unexpired risk. So that is closing. So this is opening and this is going to be a closing balance. Okay, so here we are going to write all opening balances. Clear? So here we are going to write all closing balances. So closing balance is always minus. So here also the same thing, including additional reserves. Including additional reserves. Including additional reserves. Okay, including additional reserves. So now add and deduct the balance. So after addition and deduction, so we got some balance. So we got some balance. Okay, fine. So after that, now schedule number 2. Schedule number 2. What schedule number speaks about? Since it is an insurance company, if schedule number 1 speaks about premium earned, so that is earning. Schedule number 2 speaks about the expenditure, so that is claims. Insurance company has to claim the insurances, correct? So that will reflected in schedule number 2. So what you will reflect here? Claims. Okay. So schedule number 2 speaks about, or we are going to enter claims. Okay. So under claims, so first we are going to write claims paid, whatever the claims you have to paid. So just write it. After that, add reinsurance accepted. Add reinsurance accepted. Add reinsurance accepted. Right, triple X. Then less reinsurance ceded. Reinsurance ceded. Reinsurance ceded. So that should be in bracket because we are going to deduct reinsurance ceded. So remember, accepted is add, ceded is deduct. So after doing this adjustment, so whatever the balance you will get, the difference, we call that as a net claims paid. What? Net claims paid. Net claims paid. Okay. So after that again add outstanding claims. Outstanding claims at the end of the year. At the end of the year. So that is for current year. That is for current year. Triple X. Next, less outstanding claims at the beginning of the year. At the beginning of the year, that means at the beginning, that is beginning of the year, whatever. So usually beginning of the year we will have the previous year balance. Okay, so deduct that, add and deduct. So whatever the difference you will get, that is what we call it as a total claims. Total claims. This is total claims what we get over here. Schedule number total claims. Okay, so this is total claims. So next schedule number 3, it speaks about commission. Schedule number 3 speaks about what? Commission. So let us draw the continuation table for that. I think you might find difficult at the beginning. So once we start, solution part, so you will understand very neatly. You need not to worry, but you have to, learn the this format. Without format, it is very much difficult to solve. Okay, so first learn the format without any, doubt. So next is schedules. Schedule number 3. See, in insurance company, common things. One is premium, second one claim, and third one commission. Correct? Third one commission. So, first premium, second claims, and third one is premium. Sorry, commission. So, right? Commission. Commission. Schedule number 3 speaks about commission. So, first thing you are going to write, commission paid direct. Commission paid. So, write direct commission. Okay, so write triple X. Then add reinsurance accepted. Add reinsurance accepted. Add reinsurance accepted. Triple X. Next, less commission on reinsurance ceded. Commission on reinsurance ceded. Okay, so just deduct that and find the difference. Whatever difference you will get, so that is, we call it as a net commission. Net commission. Net commission. Net commission. Okay, so that is done. So next is schedule number 4. Schedule number 4 is bit lengthier, so because that is the schedule which will have operating expenses. So schedule number 4. So we call this as a operating expenses. Operating expenses. So under that, first take down employees remuneration and welfare benefit. What? Yes, employees remuneration and welfare benefits. So write triple X. Close it down. So write triple X. So after that, travel, conveyance and vehicle running expenses. So that is travel, conveyance and vehicle running expenses. Done. Yes. Next, training expenses. Next is training expenses. Next, rent rates and taxes, if any of such kind of expenses, rent, rates and taxes. So those kind of expenses also will come under schedule number 4. If any repairs and maintenance, so that will also be under operating expenses. So repairs, I am writing repairs and maintenance. Then if you have any printing and stationaries, printing and stationery market. Then if you have any communication expenses, so communication expenses. Then if you have any legal and provisional charges which you are supposed to bear, so that is legal and professional, legal and professional charges. Market. After that, auditors fees, and any other in such kind of nature. So I am writing it as a etc. Clear that you are going to write. So etc. here what all will have. So point A I am writing as a auditor. As a auditor you might get an expenditure. Okay, as a auditor. So next B, as a advisor or any other capacity. As a advisor, you might be an advisor there or somebody, or any other capacity. If you are with any other capacity also, that is also comes under this only. So then taxation matters, if you have any taxation matters, if you are paying any professional charges. So taxation matters, triple X. Then you might have insurance matter, or you might have management services, okay, or you might be in any other capacity, in any other capacity, this also you should total and write it outer column. Okay, so clear or any doubt? Clear, right? Fine. So this is about the format, the first account, the first and very important format for general insurance company. Okay, so now we have done the calculation part. So now representing the same account, so you have to represent the same account. So let us write the title for this now. Revenue account for the year end as on that date, So now you know, like in the last calculated, that is a detailed account which we have prepared. So now we are going to represent. Okay, so now we are going to what? Represent. So let us represent our revenue account. Okay, so you have to write two amount columns. So write two amount columns. So 1, 2, then okay. So write the headings of the table as particulars, and this is schedule number, then here rupees, rupees, rupees and rupees. So number 1, income. So whatever you have calculated in income, the table, so there from that you have to write income. Under income what we get? Majorly premium earned, premium earned. So that is schedule number 1. So directly put it to the outer column. Okay. So after this, mark this as a total. Mark this as a total. This we call it as a total A. This is considered as a total A. So immediately after that we will write serial number 2. In serial number 2 what we have? Expenditures. Expenditures, correct? So we have expenditures. So what are all the expenditures we have? We have claims. First claims, schedule number 2, right? So write it in the first column. After that we have commission. So write commission, schedule number 3. So mark it. Then after that we have operating expenses. Operating expenses, schedule number 4. Right. Now total it. Now total it. Write this total again here. This is called total B. Total B. Okay. Total B. So next is operating loss or profit. So what next is operating profit or loss. Operating profit or loss. So you can write profit or loss from what? From general. That means from fire / marine. That is A minus B. A minus B. So that is, you are going to write it in XXX and it will be called as appropriations. So next we will have appropriations. Appropriations XXX. See, in the first format you have done the calculation. In the second format, whatever just now I did, so in this format you are going to take only the total columns. So you are going to take only the total columns. Okay. So I believe you have understood appropriations part. So next we will have which account? Yes. So profit or loss account for the year ended. So next we will have profit or loss account. So let us prepare the format of profit or loss account now. So write the table for profit or loss account. Write the table for profit or loss account. So I'm drawing a table for profit and loss account. The same type of table with the two amount columns. So write the heading now. Profit and loss account. Profit and loss account for the year ended. For the year ended. So write the heading for this. This is a particular column. So write it particulars. So then we have rupees, both the columns rupees. Okay. So next is first to write operating profits or loss. Operating profits or loss. Operating profits or loss. So write triple X. Under that, first point A, right? Fire insurance. So whatever operating profits or loss we got from fire insurance, so that we have to enter. Okay. So then marine insurance. Marine insurance. After that, miscellaneous insurance. Miscellaneous insurance. Okay. Next is income from investments. So write income from investments. So under that, write point A. Interest, if you have received any kind of interest, that is dividend, any dividend if you have received, and rent. So any rent if you have received, right? Total gross value. So gross value of the same you have to write here. Okay. So after this income from insurance, point B, that is profit on sale of investment. If any profit earned on sale of any investment, profit on sale of investments, right, triple H. Next, less loss on sale of investments. Loss on sale of investments. So any deductible value, so that should be deducted. That should be deducted. Loss on sale of investment. So deduct that. Loss on sale of investment, deduct that. Whatever the difference you get, you write it. Okay. So next, thirdly, any other income. Any other incomes. So other incomes. Other incomes. So write that and total it. Total it. Any other income and total it. Write it as a total A. Total A. Total A. Okay. So next is point 4. Provisions other than taxation. If any provisions are there, that to be considered. Provisions. In bracket you write so that you will remember this. That is other than taxation. Other than taxation. So write it. Write it. Other than taxation for doubtful debts. Other than taxation for doubtful debts. Other than taxation for doubtful debts. Okay. So then write bad debts. Doubtful debts is done, right? So next we have other expenditure, that is bad debt. So that we will write in the next page. So point 4 is completed. Now we are supposed to write point 5. The same table I am continuing here. It looks like a lengthy at the beginning, but once you start writing the answers, so then automatically it will be becomes easy for you, but you have to practice. Fifth one, other incomes, sorry, other expenses. Here we are writing expenses part, right? Other expenses, under that the main thing bad debts. Under that the main thing is bad debts. So I am writing here and here. So I will be closing this. So now total this also. So I am going to get sum total. So this total is called as total B. Total B. Total B. So next you write profits before tax. Profit before tax. Then you write provision, if there is any provision has been given in the problem for taxation, right? Provision for taxation. So if they have given anything, you write it directly to the outer column. So then you write as heading appropriations. Appropriations. So any appropriations related items come, so that should be reflected under this. What are those appropriation? Number 1, interim dividend. Interim dividend. Interim dividend. Number 2, proposed final dividend. Proposed final dividend. Point C. Dividend distribution tax. Distribution tax. Next you write transfer to reserves. Transfer to reserves. So write these items, amount column in the inner column, then total it, put that total to the outer column. So this is the end of profit and loss account. So this is the end of profit and loss account. So this is the format which you have to learn. So first is income and expenditure, then we have profit and loss account. So next we are going to understand the balance sheet. So next we are going to understand what? Balance sheet. Okay. So let us draft a column table for balance sheet. So same two column table with the schedule number. So you have to draw a schedule number column also. So write new balance sheet as on that date. So write the in particulars schedule number. This is schedule number, rupees and rupees. So first in the balance sheet we will have sources of funds. Sources of funds. So sources of funds is nothing but what? Liabilities. Very good. Sources of funds is nothing but liabilities. You should remember that always. Okay. Sources of fund means liabilities. So first we will have share capital, right? Share capital, schedule number 5. Share capital, schedule number 5. Next we will have reserves and surplus. Reserves and surplus, schedule number 6. Write the amount column. Then we have borrowings. Borrowings. So that is schedule number 7. So in the last column. So now total this and write that as a total A. Write it as a total sources of fund. Okay. So total it. Yes. Okay. So I am writing this as a total over here. Okay. So next is application of funds. Application of funds. So write it assets. That is nothing but assets. Under that, number 1, investments. Schedule number 8. So write directly. Then we have loans and advances. Loans and advances, schedule number 9. Directly amount column. Next we will have fixed assets. Fixed assets. Schedule number 10, amount column. Then we'll have current assets. Current assets. Schedule number 11, amount column. Then we will have other assets. Other assets. Schedule number 12, total in the amount column. Okay. So now we are going to total this. We are going to total this. So we call this as a subtotal of A. What? Subtotal of A. So write like that only. Subtotal of A. Subtotal of A. Ready, right? Fine. So next we will have current liabilities. So next we will have current liabilities. So now the extended columns we have, there is a shortage of the space, around 5 to 6 lines is enough for this, I believe. So smaller one. So we have got subtotal of A, right? Yes. So next we will have current liabilities. What? Current liabilities. Current liabilities. So under that again you write current liabilities. Current liabilities, schedule number 13. Schedule number 13. Next write provisions. Provisions, schedule number 14, triple X. And next we'll have this as a subtotal B. Subtotal B. Subtotal B. So I have done the subtotal for this. So close the amount column. Subtotal B. So next is, remember this always, net current assets. Net current assets, that is A minus B. A minus B. Okay, so write that amount. Then we will have miscellaneous. Miscellaneous. Yes, miscellaneous expenses. If any such miscellaneous expenses has been given in the problem, schedule number 15. So write it in the amount column and close this and write the difference. Write it as a total. Okay, so that is the balance sheet which we are supposed to do and tally. So this is the general format, so which we have to apply while preparing final accounts of general insurance company. So we have to prepare this format. So keep it ready and understand this format, so that it will make us easy to start the solution part. So without learning the format, so you cannot solve the problem. So remember that it is very important to learn the format. Okay. So now let us try to understand while solving the problem, there are few points which is very important and you should keep it in your mind. Clear? So along with the format, if you learn that also, so then you can solve the problem very easily. So what I'll do is I'll make it as a note. I'll make it as a note. Okay. So we'll say this as a points to be remembered while solving the problem. Okay, fine. So I'll reframe it. Yes. Important. Yes. Important points. Important points to be noted. Important points to be noted while solving the problems. So that means if you don't understand these points, which is very essential to solve the problems, you cannot solve the problems. Okay, so that is about adjustments, so which you should remember. So number one is reinsurance. Reinsurance recoveries. Recoveries Reinsurance recoveries should be always minus. Reinsurance recoveries should be always minus. Reinsurance receivables. Reinsurance receivables is always add. Remember this. Recoveries minus reinsurance receivables add. Next, reinsurance paid. If any reinsurance paid, is always minus. These 3 points is very important. Okay, so after that few more points you should remember, that we will go with the star points. Schedule number one is always income. You have to remember this. Then schedule number 2, 3 and 4 is expenditure. Okay, fine. Next, schedule number 5, 6, 7. 5, 6 and 7 are liabilities. Okay. Next, schedule number 8, 9, 10, 11 and 12 are assets. So this you must know. Schedule number 1 income, schedule number 2, 3 and 4 is expenditure, schedule number 5, 6 and 7 are liabilities, schedule number 8, 9, 10, 11 and 12 are assets. So without this we cannot do problem. So this is also very important, so that while understanding the format you will get to know about this. Okay, so next is schedule number 13 and 14 are current liabilities. Okay, then miscellaneous expenses. Miscellaneous expenses is schedule number 15. So these are all the schedules numbers, so which you have to remember. Schedule numbers which you have to remember. Okay, so now we will have a note on adjustment and treatment. At the time of solving the problem, so which adjustment and how it is to be treated, so how where you have to add and where you have to deduct, that we will understand now. Okay, fine. So now adjustment treatment, so that we will understand the major important adjustment treatments, that I'll write it in separate sheet so that you don't get you know confusions. Right, adjustments treatments, adjustment treatments, adjustment treatments to be considered while solving the problem, while solving the problems. Okay, so first adjustment you should always remember, that is reinsurance, reinsurance premium, reinsurance premium. So that is schedule number 1, it should be always minus. Clear? So next is reinsurance premium receivables, receivable. So this is also schedule number 1, schedule number 1. What you are going to do? Add. Next, reinsurance recoveries, reinsurance recoveries schedule number 2 minus. Okay, next point 4, unexpired, unexpired risk or insurance fund, unexpired risk or insurance fund. So always remember that, very important. Opening, if that is in opening, it should be add. If it is opening, it should be add. If it is closing date, closing balance, it should be deducted. Opening add, unexpired risk or insurance fund, opening add, closing deducted. Okay, the same way accepted, unexpired risk accepted, add, and ceded minus, ceded minus. So you should remember this. Okay, 4 points. So after that, fifth adjustment. So I'm moving on to the fifth adjustment, that is premium, premium outstanding due schedule number, schedule number 1. So that is add, premium outstanding due schedule number 1, add. The same way outstanding claims, outstanding claims schedule number, schedule number 2, add, and schedule number 13 add. Schedule number 13 add. Next point number 6. Unexpired risk. Unexpired risk. Unexpired risk. So from here dual adjustment. Okay, unexpired risk. Schedule number 1 add. Remember this, unexpired risk, schedule number 1 add. Okay, so the same one, schedule number 6 add. So this one adjustment reflected in 2 places. Next, 7th one, taxation. Taxation. So now this also dual reflection. P&L account. P&L account and schedule number 14 add. Schedule number 14 add. I hope you are able to catch. Next, 8, transfer to investment reserves. Transfer to investment reserves. Transfer to investment reserves. So here schedule number 1 add. Here schedule number 12 add. Okay, so next I am moving number 9, reinsurance premium. Reinsurance premium receivables. Reinsurance premium receivable. Schedule number 1 add. The same way schedule number 12 add. 1 add and schedule number 12 add. So next is adjustment number 10. Commission said that schedule number 3 add, then schedule number 13 also add. Okay, next 11th adjustment, additional reserves. So that is schedule number 1 add, then schedule number 6 add. So you also make a note that it includes in unexpired risk. It includes in unexpired risk. It is also very, very important. Okay, so next is 12th adjustment consideration, that is reinsurance recoveries. Reinsurance recoveries, that is schedule number 2 minus. So this 12 adjustment, whatever you have learned, it is very, very important. So this adjustment, within this 12 adjustment only you will get the problems, so which we are going to solve in the coming classes. Okay, so without these adjustment, problem cannot be solved. Okay, so first learn the format and as well the adjustment treatment, whatever I have taught you so far. See, you have to understand format, you have to learn format, so that you can solve the problem. Okay, so to solve the problem, to solve the uh, format or Proforma. At the same time, at the end of this video, I have showed you that treatment of adjustment. So 12 adjustment is there. Out of this 12, you will have 4 to 6 adjustment has to be done in while solving the problem. Okay, 4 to 6 adjustment will be given while solving the problem. So these adjustment, where to add, where to deduct. So if you learn, then only we can solve the problem. Clear? So learn this, specifically learn, so that we can start solving the problem. So from next immediate class, I am going to start the problems. Okay, so we are going to solve the problems. So until then, take care, see you soon, bye bye, stay safe, take care of your family members, bye, take care.